Good day, ladies and gentlemen. I am Marcel, a fund analyst in the PSG Wealth Multi-Management team. Thank you for joining me today. I will be discussing the PSG Best Ideas Funds today. I will also cover two of the Best Ideas Funds in more detail, focusing on the funds' objectives, compositions, and historical risk and return figures. Just a quick introduction. One of the problems clients face when investing on list platforms is the plethora of fund choices. Which fund to pick is probably the most frequently asked question we get from our clients. The second most asked question is whether or not they should switch funds. The PSG Best Ideas fund range solves both of these. They are created by a blend of single manager funds based on your risk tolerance, and they automatically make risk optimized adjustments. The PSG Best Ideas portfolios are portfolios that we created for direct PSG clients on the PSG Wealth platform. We created 6 different models that cover a wide range of risk-return objectives that vary in terms of their cash, bonds, equity, local, and offshore asset class exposure. We constructed the portfolios using diverse mandates from PSG Asset Management's award-winning fund range. All funds are blended using a Markowitz portfolio optimization model based on the underlying funds' historical returns, volatility as measured by standard deviation, and risk-adjusted returns. A quick background on us, PSG Multi-Management. We currently manage over 55 billion in our fund-of-fund solutions. This makes us the largest retail multi-manager in the country. So what has allowed us to experience such phenomenal growth and success? We have a robust and proven investment philosophy that focuses on 3 core principles. Firstly, to deliver consistent peer group beating returns for our clients. Secondly, to deliver these returns at a below average risk by implementing split funding, or in layman's terms, blending different funds together to achieve optimal risk-adjusted return solutions. Lastly, we use our scale to negotiate competitive fees with our underlying managers and pass this saving on to our clients. The funds that we use to construct the PSG Best Ideas portfolios are all from the award-winning PSG Asset Management fund management house. They have a wide fund range that covers the majority of the asset classes, making them ideal for our portfolio optimization model. So let's have a closer look at PSG Asset Management, their philosophy, and their fund range. PSG Asset Management has 34 billion assets under management. They are a true value manager, so their thinking is long-term oriented. They have a proven process that has resulted in them consistently being one of South Africa's top fund managers year after year. For the first quarter of 2017, PSG Asset Management was rated the top South African unit trust manager according to the Plex Grant survey. Their funds have also won numerous Raging Bull awards. Their value investing approach determines whether a company is trading at an attractive price that offers a margin of safety for their investors. This results in excellent long-term risk-adjusted returns that have gained industry recognition. Lastly, PSG Asset Management is obsessed with research. They have a strong team that have combined investment experience of over 150 years. This ensures that all investment decisions are made with due care, diligence, and have a reasonable basis. Their equity philosophy is value-driven, so they look for high-quality companies by analyzing their moat and management and only allocate when they are not overvalued, in other words, trading at an attractive price or below its intrinsic value, therefore offering a margin of safety. Moats in the traditional sense are the deep and wide ditches that surrounded castles and provide a defense against attacks. In this scenario, it refers to a company's competitive advantage that is not likely to disappear in the medium or even long term. This advantage can be their unique product, their established distribution network, or their pricing advantage. This slide illustrates PSG Asset Management's suite of funds. This ranges from money market and income funds, multi-asset and flexible funds like their popular Balanced Fund and Flexible Fund, pure equity funds, and 2 offshore funds. This provides investors with exposure across the risk-return spectrum, both locally and offshore. Their stable, balanced, equity, and flexible funds were all ranked with the highest 5 Plex Grant status in 2016. The PSG Balanced Fund also won the coveted Raging Bull certificate as the fund which delivered the best risk-adjusted returns over the past 5 years in the South African multi-asset high equity sector. We'll now take a closer look at the PSG Best Ideas funds, the portfolio range that we offer, their asset allocation, and a backtest of their performance. We offer the following 6 PSG Best Ideas portfolios: the flexible income, the low equity, the managed, the aggressive, global managed, and global aggressive portfolios. The investment objective of the flexible income is to achieve capital preservation by investing in fixed income and money market instruments. The portfolio is aimed at conservative investors that require income and capital preservation. The low equity portfolio's investment objective is to achieve capital growth by investing in multiple asset classes in the South African and international markets. The portfolio aims to outperform the CSA South African multi-asset low equity sector average, which is your cautious and stable funds. The minimum recommended investment horizon for this fund is 3 years. The investment objective of the managed portfolio is to achieve capital growth by investing in multiple asset classes in the South African and international markets, but with slightly more aggressive exposure to growth assets than the low equity fund. The portfolio is therefore for clients with a moderate risk profile. The portfolio aims to outperform the CSA South African multi-asset high equity sector average, which is your typical balance funds. The minimum recommended investment horizon for this fund is 5 years. The aggressive portfolio's investment objective is to achieve capital growth by investing largely in growth assets in the South African and international markets. The portfolio is for clients with moderate to aggressive risk profiles. The minimum recommended investment horizon for this fund is 5 years. Moving on to offshore funds, the investment objective of the PSG Best Ideas Global Managed Portfolio is to achieve capital growth by investing purely in a variety of international asset classes. This portfolio is for clients with a moderate to aggressive risk profile due to the flexible mandate and the exchange rate risk inherent in the portfolio. The minimum recommended investment horizon for this fund is 5 years. Lastly, the Global Aggressive's investment objective is to achieve capital growth by investing fully in international equities and cash. The portfolio is for clients with an aggressive risk profile due to its high exposure to equities and the exchange rate risk inherent in the portfolio. The minimum recommended investment horizon for this fund is also at least 5 years. The portfolio range is comprehensive and should allow clients with various return and risk objectives to achieve their investment goals. This slide illustrates the asset allocation of the PSG Best Ideas portfolios. The flexible income has 96.4% exposure to South African non-equities, therefore bonds and cash. This contributes to the defensive nature of this fund. The low equity portfolio has a maximum equity exposure of 40%, with the other 60% or so invested in bonds and cash. The managed portfolio can have up to 75% invested in equities, but this is usually closer to 65%. This is our most aggressive Regulation 28 compliant portfolio. The aggressive portfolio has high exposure to equities, which will usually be around 80% or more. On our offshore side, the global managed is almost fully invested offshore, with about 70% invested in offshore equities. While the global aggressive portfolio is slightly more aggressive than the global managed, with a higher allocation to offshore equities, this should provide additional growth over the long term. We backtested the portfolio's performance to 2013, so this gave us roughly 4 years of performance. The more aggressive portfolios achieve the best returns over the long term, as they have higher exposure to growth assets such as equities, but are also a lot more volatile over the short term. Whereas the flexible income and low equity funds provide investors with more defensive solutions that protect the downside and reduce volatility over the short term. This is evident from the more linear returns on this graph. So let's have a closer look at the PSG Best Ideas Managed Portfolio. So what is this fund's objective? The investment objective is to generate a reasonable return over long-term periods through investments in a wide array of asset classes, investing in South African and international markets. It is for clients with a moderate risk profile. The minimum recommended investment horizon for this fund is 5 years, in other words, for clients seeking long-term wealth creation within an acceptable level of volatility during any market cycle. This fund is a great alternative for investors wishing to invest in balanced funds but wish to have slightly more flexibility. This fund also aims to comply with Regulation 28, so it may be used in non-discretionary investment products, such as retirement annuities and preservation funds. It may also be used in discretionary investments, such as the voluntary investment product on the PSG Wealth platform. This fund's asset allocation is broadly 42% in local equity, 13% in local cash, 22% in offshore equity, and 2% in offshore cash. This gives you a total exposure of 63% to equity and 24% to offshore assets. The fund consists of two PSG asset management funds, namely 75% in the Balance Fund and 25% in the PSG Flexible Fund. Its top 10 equity holdings consist of a good mix of local and offshore stocks, ensuring that the investor is well diversified and not overly exposed to region-specific or company-specific or political-specific risks. This graph illustrates the 5-year rolling excess returns of the portfolio relative to the CISA South African multi-asset high equity peer group average. We prefer rolling returns to growth charts, as rolling returns show consistency of performance and is not so heavily impacted by a start and end date. As you can see, the fund has outperformed the average balance fund quite comfortably by anything from 0.9% to 3.5% over all rolling 5-year periods. This graph illustrates the 1-year and 5-year rolling returns of the fund relative to the ASISA sector. More importantly, it shows what percentage of rolling periods the fund has outperformed the benchmark. Over shorter 1-year rolling periods, the fund still manages to outperform the peer group average over 80% of the periods. Over the longer 5-year rolling periods, it outperforms a perfect 100% of the periods. This is testament to the robust historical returns that PSG Asset Management has provided, especially over the relevant investment horizon of this fund of 5 years. So how has the fund performed relative to the 5 biggest balance funds in the CISA sector? Together, these funds manage about 336 billion rand. The managed portfolio is represented by the dashed charcoal line on this graph. This portfolio has consistently outperformed the big 5 balance funds in the business over the majority of the 5-year rolling periods over the last 6 years. Only looking at returns is not enough. We need to understand how much risk managers take in order to get their returns. For that, we look at the risk-adjusted returns. This combines return metrics with risk metrics, and for this we use the Sortino ratio. Over almost all rolling 5-year periods, the managed portfolio has delivered superior risk-adjusted returns over the last 6 years. This illustrates that per unit of risk assumed in the fund has delivered better returns than the 5 biggest balance funds in the market. Next, we take a look at the PSG Best Ideas Low Equity portfolio in a bit more detail. So, what is this fund's objective? The investment objective is to generate a reasonable amount of medium-term growth through investments in a wide array of asset classes. It is for clients with a stable or cautious risk profile. The minimum recommended investment horizon for this fund is 3 years, so this fund is not for investors with a short-term investment horizon of 1 or 2 years. This fund is a great alternative for investors wishing to invest in stable funds, but wish to have slightly more flexibility with the additional balanced and income fund exposure. This fund aims to comply with Regulation 28, so it may also be used in non-discretionary investment products and discretionary investment products. The fund's asset allocation is broadly 22% in local equity, 21% in local cash, 13% in offshore equity, and 3% in offshore cash, with the rest mostly going to local bonds. This gives you a total exposure of 35% to equity and 16% to offshore assets. The fund consists of 3 PSG asset management funds, namely 60% in the PSG Stable Fund, 20% in the PSG Balance Fund, and 18% in the PSG Diversified Income Fund. Its top 10 equity holdings consist of a good mix of local and offshore stocks, ensuring that the investor is well diversified and not overly exposed to region-specific company and political risks. This graph illustrates the 5-year rolling excess returns of the fund relative to the CISA sector. As you can see, the fund has outperformed the average fund by anything from 0.6% to over 1.1% over all rolling 5-year periods over the last 6 years. This graph illustrates the 3 and 5-year rolling returns of the fund relative to the CISA sector. And as with the As with the other graph, it shows what percentage of rolling periods the fund has outperformed the benchmark. Over 3 years, the fund still manages to outperform the peer group average over 89% of the periods, while over the longer 5-year rolling periods, it outperformed a perfect 100% of the periods over just the last 6 years. So, how does this fund's risk-adjusted returns look, or how has it looked historically? For this, we look at the Sortino ratio and compare it to the 4 biggest stable funds in the market that manage about 160 billion. Over almost all rolling 5-year periods, the managed portfolio, the low equity portfolio, has delivered superior risk-adjusted returns over the last 6 years. This illustrates that per unit of risk assumed in the fund has delivered better returns than the 4 biggest stable funds in the market. In conclusion, we have covered the basics of the PSG Best Ideas Funds' process, the PSG asset management funds that we use as building blocks, a quick overview of the fund range that we offer, as well as more detailed information on the PSG Best Ideas Managed Fund and Low Equity Fund. Just a quick recap. These portfolios are a direct client offering, so in other words, for clients that do not make use of a financial advisor, but prefer to invest directly in unit trusts. The portfolios are exclusively available on the PSG Wealth platform. They cover a wide range of return and risk objectives, allowing investors to achieve their investment goals, be it short-term capital preservation or long-term capital growth. The portfolio optimization leverage off of PSG Multi-Management's proven and robust methodologies. And we use PSG Asset Management Funds, which is a multi-award winning fund manager that is consistently rated amongst the best in the country. We also had a closer look at 2 of the portfolios in our fund range. The PSG Best Ideas Managed Portfolio for clients with a minimum recommended investment horizon of 5 years that are seeking long-term wealth creation within an acceptable level of volatility during any market cycle, with equity exposure of around 65 to 75%. We also looked at the PSG Best Ideas Low Equity Portfolio for clients with a minimum recommended investment horizon of 3 years that are looking to generate a reasonable amount of medium-term growth, with equity exposure of around 35 to 40%. That is all for today. Should you have any questions, please feel free to send us an email at wealth@psg.co.za or call us on 0860 774 774. Thank you for your time and have a good day further.